I've scanned through the largest 350 UK listed companies to search for shares which have not only raised their dividends consistently for at least the last 7 years, but which have also seen their share price rise over the last 5 years. But it wasn't easy finding them, and out of 350 companies, only 17 met this criteria. And here they are in order of ascending dividend yield. The first is Bunzl, and its products really do make the world go round. It sells medical gowns, hard hats, disinfectants, food packaging and disposable cutlery, to name just a few of its wares. And it sells them across 31 countries. It also has a successful acquisition strategy and has bought over 200 smaller businesses since 2004, and has plenty of financial firepower to continue growing. Dividend yield is currently 2%, but it's managed to grow its dividends for more than 23 years. The share price is up over 40% in the last 5 years. Now let's go back to that dividend. If you bought shares in Bunzl in the year 2000, you would have paid around £3 a share. The total dividend for the year was 9.4p a share, giving you a dividend yield of around 3% a year. If you buy shares in Bunzl today, they cost around £32 a share and pay a yearly dividend of 63 pence a share, which is a yield of 2%. But here is the magical thing. For anyone who bought their shares in the year 2000 and still own them, they would now be getting an annual dividend yield of 21%, and this is highly likely to keep on rising. Not only that, but the share price has increased nearly 10 times as well. So the moral of the story is that buying shares in companies which grow their dividends and holding for the long term can be very lucrative indeed. Of course, none of this is investment advice and is only for entertainment purposes. Next is REITS, which is a global provider of analytical tools for companies and professionals. It sells to customers in more than 180 countries. More than half of the business is subscription-based. Repeat purchases by customers provide stable and predictable sales compared to one-off payments. The dividend yield is 2%, and REITS has managed to increase its dividend for the last 12 years. And over the last 5 years, the share price is up 55%. At 15 is the drinks maker Diageo. The firm owns over 200 brands with sales in more than 180 countries. Guinness is now the most popular beer in UK pubs. It's using this increasing size to reward shareholders by raising dividends and buying back shares. I see this trend continuing. Dividend yield is 2.1%, but the company has raised its dividends for more than 23 years in a row, and over the last 5 years the shares are up nearly 33%. Diageo is a company I've owned for several years and I intend to hold for the long term. At 14 is Sage Group. This company is one of the UK's leading tech companies. Yep, that's right, a UK tech company. Sage has been selling accountancy software for decades. Once a company has installed it, they are unlikely to change to a different provider. This gives Sage impressive pricing power. Dividend yield is 2.3%, and Sage has raised its dividend consistently for more than 23 years. Over the last 5 years, the share price has increased almost 22%. At 13 is Cranswick. This meat-focused food supplier is a resilient business and has a long record of rising revenue and shareholder dividends. The dividend yield is currently 2.4%, and Cranswick has raised its dividends for over 23 years in a row. The share price is also up slightly over the last 5 years. At 12 is Hikma. This pharmaceutical giant is forecasting impressive growth in 2023. Dividend yield is 2.4%, and Hikma has raised its dividend for 11 consecutive years, and the shares are up 31% in the last 5 years. At 11 is CRH. This company is a global manufacturer of building products. Its underlying fundamentals are solid. It has decent profit margins and a strong return on capital. The dividend yield is 2.6%, and it's raised the payout for 7 consecutive years. And the share price has grown 41% over the last 5 years. Now, before I reveal the top 10, if you are thinking about starting your own investing journey, then why not check out Trading 212, which is a really cost-effective platform. And if you sign up using the link in the video description, then we could both get a free share worth up to £100. And number 10 is a company which is part of my own portfolio. BAE Systems has had a terrific record of long-term dividend growth. Even during tough economic periods, the amount spent on defence remains largely unchanged at all points in the economic cycle. In recent times, however, BAE Systems has seen its profits surge as countries around the world boost their defences. Dividend yield is 2.7%, and the payments have increased for 19 consecutive years. Over the last 5 years, the share price has risen 52%. At number 9 is Clarkson. This FTSE 250 firm was founded more than 170 years ago and is now the world's leading shipbroker and shipping services business. Clarkson is active in sectors including oil and gas, renewables, grain and container shipping. Recent trading has been strong. I think this is likely to continue given the uncertain and changing conditions in global energy markets. Dividend yield is 3.1% and the company has raised the dividend payments for 20 consecutive years. Shares are up 19% over the last 5 years. At number 8 is SafeStore, a leading supplier of self-storage services in the UK and continental Europe. Self-storage continues to see growing demand in the UK. Dividend yield is 3.2% and payments have increased for 13 consecutive years. The share price is up 73% over the last 5 years. At number 7 is Segro. This FTSE 100 company builds, acquires and then lets out so-called big box commercial properties. These are the sorts of assets for which demand is booming as e-commerce continues to grow. They are popular bases for manufacturers, retailers and couriers. Dividend yield is 3.3% and the dividends have grown for 9 consecutive years. Shares are also up nearly 26% over the last 5 years. At number 6 is Big Yellow Group, another real estate investment trust, and as I've just mentioned, demand for extra space is surging in the UK. The company owns 108 self-storage hubs and has a pipeline for 11 more, comprising a total of 900,000 square feet of space. Dividend yield is 3.7% and the dividends have increased for 12 consecutive years. Shares are up 21% over the last 5 years. Number 5 is United Utilities. Keeping the water flowing and sewage processed are two of modern life's essential services. Profits can also be expected to increase steadily over the long term, regardless of difficulties in the wider economy. I've owned this company for several years. Dividend yield is currently 4.1% and the dividend has risen for 11 consecutive years. The share price is up almost 37% over the last 5 years. At number 4 is National Grid, another utility company which I have in my portfolio. There are over 30 million residential and commercial properties in Great Britain. National Grid acts as the electricity system operator for them all. The company has no competitors and is therefore a virtual monopoly. The yield is a healthy 4.4%. Dividends have risen for more than 23 consecutive years. Over the last 5 years, the share price is up nearly 33%. At number 3 is Greencoat Wind Energy, which operates a wide portfolio of UK wind farms. Its aim is to offer an attractive, sustainable dividend which increases in line with inflation while preserving capital in real terms. The dividend yield is an impressive 5% and it's grown them consistently ever since the shares were floated on the market. The share price has risen nearly 33% over the last 5 years. I'm a real fan of this company and I've owned them ever since the start. At number 2 is Sirius Real Estate. The company operates a range of business parks, studios, workspaces and office units. The dividend yield is 5.6% and for 8 consecutive years the company has raised its payments. Shares have increased 19% over the last 5 years. And at number 1 is Foresight Solar Fund. Fossil fuels aren't going away just yet, but many investors believe renewable energy offers much better long-term growth opportunities. This group invests in solar power and battery storage products across the UK and abroad. The dividend yield is a huge 7.3% and they have increased payments every year since flotation. The shares are up slightly over the last 5 years. Please like and subscribe if you found this video useful and let me know your own thoughts on any of the companies mentioned, or perhaps share some of your own recommendations and ideas. See you next time and happy investing.